Hey everyone, welcome back. So I hope you guys had a great day. Bitcoin obviously did fantastically today along with the miners, so that's obviously good news. And here's what we're going to get into today. We're going to get into obviously Bitcoin chart. We're going to take a look at it. It's still looking bullish on the 1 hour, 4 hour chart, not so much on the daily chart. We also have a story obviously on Bitcoin, but we're going to also take a look at miners here, how they did today. We'll also take a look at 300 million miners are selling. This is for the last basically 3 to 4 weeks, how much the miners have possibly sold. And we'll also take a look at Ethereum, why it's pumping right now. It's up another huge day to day. So we'll take a look at a story on that. And we'll also take a look at Bitcoin bottom, or do we have one last leg down to go before we finally capitulate? So we'll take a look at that as well. And as always, you guys know the drill here, not financial advice. I'm invested in the following coins and companies for full disclosure. Excuse me. And let's get into Bitcoin here. So Bitcoin right now on the daily chart we're looking at is at 23,309. The RSI is obviously much higher than it has been in the past, or at least in the last couple of weeks. It's at 61 right now. And just looking at the chart right now, I don't see any kind of bullish trend on it, at least not yet. I mean, we were right around here on the peaks if you're looking at it, and we were much higher on the peak. We were at 46,515 at that time. So we still have a ways to go. But if we look at the 4 hour chart here, we can see that we are right now on the RSI at about 66. Last time we were around there, we were even here. We were much lower in price. We were at 21,465. We're obviously at 23,000, so a nice increase. And if we go further out back, we were up a little bit higher here, right around there. We were at 21,778, and we've obviously gone up in price as well. So the RSI has been flat, price has been going up, which is obviously a nice leading bull indicator, at least for the short term. 1 hour, same thing. RSI has obviously peaked above the overbought territory, but has come down now. It is at 63. And we can see here that last time we were around this range, we were right about here, which was, let me see here, that was here. We were at 22,420, 22,413. We're obviously up quite nicely from that. So at least short term, we're looking bullish on Bitcoin, but we will see. Also, the Bitcoin network hash rate is at 190 million right now. It has obviously been coming down. We did peak here at approximately 270 million on the hash rate, and that was back on the June 8th. So we've obviously come down. We're obviously seeing miners getting shut off, the ones that are less profitable, and possibly some of the enthusiast miners that are mining from home, which have a much higher electricity rate, are shutting down as well. Ethereum was up nicely today. It was up, let me see here, July. We're on the daily chart here again, and 18th, we are right now on the 19th. So yesterday was up quite a bit. It was up, let me see here. It was up 18% on the day yesterday. It's obviously gone over to the new day, and we're down a little bit here right now, about down 2.7% or so right now on the day. It's still looking pretty, on the daily, it's not looking bullish at all. If we look at the peaks here, where we were, last time we were right around here. We were at a much higher price point at that point. Looking at the 4 hour chart, I mean, we were way up here on the RSI. We were above 82, which was way oversold. We obviously come down a little bit, but we've gone up in price, which is good. But we can go back to about here. We were lower at around 1,300. Now we're at 1,500. So obviously a nice increase in price. So we're still bullish short term. Long term is still unknown. All right, so let's take a look at the miners here really quick, and then we'll get into the news that we wanted to cover. So Sphere 3D ANY was up one day. It was up 10.53% today to 77 cents, up a little bit in the after hours right now. And let's take a look at the next one. Argo was up 9.38% to 42 cents, up and no trades in the after hours. And then we got Bit Digital was up 16.18%. So a nice gain for Bit Digital, obviously, up a little bit more in the after hours to $2.03. Bitfarms was up 14.4% to $1.43, up a little bit in the after hours to $1.48. Then we got, I want the switch, there it goes. Core Scientific was up 14.79% today as well to $1.94. We got DigiHost was up 6.61% to $1.29. Didn't do too well today. DMG was up 10.08% to 25 cents, and Hive blockchain was up 8.38% to $4.01. And then we got Hut 8 was up 15.43%, which was really good, up to $2.02, up a little bit more in the after hours to $2.04. Then we got Iris Energy was up 10.44% to $3.49. Luxfolio Holdings was up 11.79% to 11 cents. Marathon Digital was up huge, 32.17% to $12.90. And this is probably based on the fact that they provided news that all of their hash rate has basically been secured for hosting. And that's possibly why the stock is pumping. Obviously, Bitcoin's going up as well, so they're going up as well. Their market cap is now at 1.37 billion, which has obviously increased quite nicely over the last couple of days here. Mawson was down, obviously, 8.32% today to 80 cents. The reason for it is obviously they are diluting shares by about 10 million shares or so at a strike price of 80 cents, and that's where we are right now. So unfortunately, Mawson is in a little bit of pain right now because of Celsius Mining filing bankruptcy on them. So that's obviously having a negative impact on them. Riot Blockchain was up 12.04% today to $6.98, up a little bit more in the after hours, almost 4.5% to $7.30. Stronghold was up 18.89% to $2.14, up a little bit in the after hours to $2.19, and Bitcoin difficulty. So that's it on that. Let's get into the stories here right now. So we got crypto miners moved over 300 million of Bitcoin in one day, and some are dropping out altogether. And I actually have a spreadsheet that goes along with this a little bit to look at the dynamics between Bitcoin price, hash rate, and the miners that you're using basically, and how that affects everything here. So 14,000 Bitcoins worth more than 300 million at its current price was transferred out of wallets belonging to miners in a single 24-hour period at the end of last week. And in the last few weeks, miners have offloaded the largest amount of Bitcoin since January 2021. The phenomenon is called miner capitulation, and it typically indicates that miners are preparing to sell their previously mined coins in order to cover ongoing mining expenses, which is kind of what we've seen here. We saw Bitfarms sell a bunch. We saw Riot. We've seen, obviously, Core sell a bunch. So that is obviously possibly what's happening here. Meanwhile, inflation is on a tear, and the cost of energy is hitting record highs as the war between Russia and Ukraine rages on, right? We know that. Lower Bitcoin prices and high energy costs are compressing profit margins for miners, which is part of why some are selling Bitcoin at current prices to try and contain exposure to continued volatility in the sector and mitigate against further risks to their bottom line. Given rising electricity costs and the Bitcoin steep price decline, the cost of mining a Bitcoin may be higher than its price for some miners. And we'll take a look at my spreadsheet. I'll show you guys what I mean. This was from Citi analyst Joseph Ayub, which wrote that on July 5th. With high-profile reports of resignations from mining companies as well as miners that have used their equipment as collateral to borrow money, the Bitcoin mining industry could be under growing pressure. The note continued, which is true. We've seen not only Bitcoins being used as collateral, we've seen miners being used as collateral. So it's obviously put a strain on the system and what's the word I'm looking for? Increased, obviously, the selling pressure on Bitcoin. Our costs, expenses, and liabilities are in dollars. So Core Scientific, which is one of the largest publicly traded crypto mining companies in the U.S., sold nearly all of its Bitcoin in June. CEO Mike Levitt tells CNBC that just like any other business, Bitcoin miners need to pay their bills. Yes, they need to pay the bills, but the HODL portion of it, this is just my own commentary here, they can't be HODLing it through the bull runs. They got to be selling it through the bull runs as well, not only selling in the bear markets, which is what a lot of them are doing right now. Continuing on here, we mine and earn or produce Bitcoin, but our costs, expenses, and liabilities are in dollars, which is true. That's why I keep saying they got to be selling it every month. Not everything, but a portion of it at least. Keep selling it, and that way you're dollar cost averaging into the bull run and dollar cost averaging down into the bear market. Continuing on here, so it's profitable to mine Bitcoin, Levitt says, with around 50% margins across the industry. That's down from 80% margins at its peak. Obviously, Bitcoin has fallen down about 70% from its peak in November of last year, and that would obviously make sense here. So last month, Core sold 7,202 Bitcoins at an average price of $23,000. Levitt tells CNBC they invested the proceeds of approximately $167 million, primarily into growth-oriented activities, including new Asic servers, additional data centers, capacity for their self-mining and co-location businesses, but they also deployed some of the capital to repay debt and to help settle 5 years of employee stock grants. Unfortunately, they had to do that. Excuse me. So as prices fall, the global hash rate or the competition for production of Bitcoin decreases as less efficient miners come off the network. And like I said, we'll take a look at that spreadsheet that I did to kind of show that a little bit. And as less efficient miners come off the network and global hash rate declines, machines that continue to mine Bitcoin get more productive, which is also true, which we've seen with obviously the Bitcoin network hash rate dropping to 190 million. And then he says here, and thus the cost of energy, if you will, per Bitcoin produced goes down as well, said Levitt. So that's it. So let's take a look at my spreadsheet here really quick and kind of show you guys what's going on here. So hopefully you guys can see this pretty well. So obviously a couple of things that have an impact on revenue for a miner. You got electricity cost, you got the Bitcoin network hash rate, you got the BTC price, and obviously the watts per miner that are being deployed. So currently I have it set to 3 cents for the electrical cost, 190 million for the network's hash rate right now. BTC price is right around 23,400. And we're using the 3,300 watts for per ASIC miner. That is in line with the Ant miners S19s. And we do have these miners going from 20 terahash up to 100 terahash here in increments of 5 terahashes per section. And then we do have the price of Bitcoin here at 23,400. And then we're going down by 2,000 or up by 2,000 here, just for comparison reasons. So obviously the miners that are that have pretty low electrical costs at 3 cents right now, they can be still operating the older 25 terahash miners right now and still be profitable at it. So this whole chart here, and that's really a chart, it's all this data here is all the revenue combined minus electricity costs, and so basically you're getting net revenue for each type of miner here. Excuse me. So looking at it, obviously 25 terahash miners are still profitable at 3 cents per kilowatt hour. But look what happens when we plug in for somebody that's a home enthusiast that's mining at home. They're probably getting around 10 cents per kilowatt hour, if not a little bit higher, depending on where you live and what your electricity provider is. And that is a stark difference between industrial grade miners and home hobbyist miners. Right now, you're looking at the same price at 23,400. You're looking at a miner that has to be at least 75 terahashes or higher, right, in order to be profitable right now. And you're just barely profitable. You're at 39 cents right now. So if the Bitcoin price goes down to 21,000 or so, you're not making any money on it, right? It's costing you money. And it's costing you $7.92 per miner at 10 cents, which is a cost per month per miner, $237 per miner. And if you have like 5 miners, you're looking at about $1,200 a month in electrical cost on that. So if you're not making money, you're definitely not running those machines. You got to really keep an eye on it. So going back here to the 0.03, I mean, even if we're going to go to 0.06, you can see that the miners here would be, the 45 terahash miners would be still profitable, just barely. And then everything south of that would be not profitable right now. And if the price obviously goes down a little bit to where we think it might go down to maybe 15,000 or so, if that happens, you're looking at possibly miners at the 70 terahash range being only profitable here. So it really does depend on where the price of Bitcoin is, the electrical cost, network, obviously, hash rate as well, and the watts used by the miners. So even if the Bitcoin network hash rate goes up to, let's just say 240 million hashes, we're still looking at which one would be currently profitable. The 55 terahash miners would be profitable, just barely. And then you're looking, obviously, Bitcoin price goes down, you're at the 85 terahash miners being profitable at 15,400 or so. So huge change there. And if we go to the home enthusiast miners, which are at 10 cents, well, now you're looking at having to have the 95 terahash miners, and then you're just barely profitable at that point as well. So this is kind of cool to look at it this way. You can play around with it. Obviously, it's available to my Patreon members. I'll post this later on today. You guys can play around with it if you want. It's available there for those members. All right. So I hope this kind of helps illustrate the way everything works in line with electricity, network, BTC price, and watts, how you can be profitable or not profitable based on just a few changes here and there. All right. let's get into the next story, which is on Ethereum. So Ethereum, what is driving the Ethereum merge right now? Is the Ethereum merge driving the rally? That's what I wanted to say. Which could be the case here. We obviously had a story come out from one of the developers within the last couple of days that they're planning on switching over to proof of stake in September sometime. So we'll get into this here. So Ethereum, the second largest cryptocurrency by market cap, is up 45% over the week, outpacing most other assets you can bet on. There might be an easy explanation here, and let's get into what that might be. So the market rally began last week after Ethereum developer Tim Bako proposed September 19th during an open developers call for the network to finally switch from proof of work, an energy-intensive way to securing blockchains, to an environmentally friendlier proof of stake protocol. The event signals, as Whitmore suggested, Whitmore was talked about here, he had a podcast, I guess, a return of optimism in crypto markets after a months-long slog of depressed prices. Moreover, the merge is filling a narrative void. The stories crypto folks can tell others about how this technology is reshaping the world, right? Which could be also true. Narratives are useful for people to coordinate actions alongside shared beliefs, but they can also be dangerous delusions, like Three Arrows Capital's co-founder Su Zhu idea of the super cycle, the idea that the most recent crypto rally was sustainable, which obviously we know now in hindsight that it wasn't. There are some reasons for optimism about Ethereum, namely the merge would be the most sophisticated upgrade in the digital assets industry's 14-year history. It would move the Ethereum to a less environmentally taxing system and improve the functionality of the most used blockchain. It could also put crypto in use under a positive light, which is true. But it's also not enough, right, to obviously get the price going. There's also more. Others see structural reasons for how the merge could catalyze prices. The upgrade is a structural shift in how Ethereum could be used, rewarding holders who stake their assets with the network. The shift could even create Bitcoin-like deflationary pressure that further rewards hodlers. In this scenario, people who are buying Ethereum now in anticipation may see it more as an investment than a trade, which is true. And hopefully you guys know the difference between proof of work and proof of stake. Proof of stake, you need to hold your coins, stake your coins basically, in order to get rewarded, as opposed before miners would get rewarded for obviously the hash power. Continue on here. There's going to be virtually no sell pressure when the merge happens. Everyone who's staking is locked up. Everyone remaining with their money in staked Ethereum is holding it until it repegs. Anyone who had their money on Voyager or Celsius is locked in bankruptcy proceedings for at least 5 to 10 years. And we don't know how much coins or what's the value of those that are locked up basically by Voyager, Celsius, and who else had them at that time. That's having trouble right now. So we'll just have to see how that one plays out. But still a little risky trade. So the hope is that a dump won't follow, right? We're all hoping that we continue going up, but we may still have a little bit of a pull, leg down. We'll have to see. I'm rooting, obviously, for us to go up. The merge represents the culmination of years' worth of work, countless brain cycles, nearly immeasurable test nets, and Ethereum's biggest backers' commitment to not only improving the network, but also ensuring it might stand the test of time. That's the story that people could be buying. It's important, however, to acknowledge that the event is still a risky trade and there are long-term regulatory, technological risks and crypto faces. So obviously with Ethereum, they have billions of dollars running on this blockchain. It is imperative that they get this right. So if they kick this can down the road, which they have done before, I'm all for it. They got to get this right. They got to get it 100%. There is no chance for error. If error happens, the price is going to fall. All right, so that's something that they are obviously doing all their best work trying to avoid, is having that problem. They want to make sure that the test net, when it goes live, is perfect. You need it to be perfect because you really do have billions of dollars at stake here. So I'm rooting for them to get this right. And even if it takes them a little bit longer, I'm fine with that. So that's Ethereum, why it's possibly pumping. And let's get into some data points to a Bitcoin bottom, but one metric warns of a final drop to 14K. And that's kind of what I've been looking at. The charts you're looking at, we might still have a one leg down, but we'll see. So one metric that has proved to be a reliable indicator of a bear market's bottoms is realized price, which is the value of all Bitcoin at the price they were bought divided by the number of BTC in circulation. So here's the chart that we're looking at here. So in 2011 to 2012, we had 157 days where the Bitcoin price was below the realized price. In 2014, 2015, we had 301 days, which was a lot. That was a tough one. In 2018, 2019, we had 134 days, and so far in 2022, we've only had 35 days. So if history repeats itself, we still have a long ways to go before we possibly have our full bottom or realized bottom, basically. We can see here in 2011 that we did have a couple of days. We're kind of looking at the same part here where we had a couple 35, 40 days or so, and then we dropped even further. Hopefully we don't drop as far as we did in 2011. And we do have it here, obviously, in 2014 a little bit, where we dropped a little bit more here as well, below it. And in 2018, 2019, I mean, we pretty much bottomed pretty quickly there after that, and then continued going sideways for a while. 2020 was obviously the pandemic and the shutdowns and everything else. That contributed to only 7 days. And then obviously the stock market rebounded along with Bitcoin and everything else rebounded. And we were on a bull rally here through 2021 into November. And then we've obviously fell back down to earth. All right, so that's one metric here. So as shown on the chart above, with the exception of the flash crash in March 2020, Bitcoin has traded below its realized price for an extended period of time during bear markets, which we can obviously see here. Glassnode said the average time spent below the realized price is 197 days compared to the current market with just 35 days on the clock. So we obviously have more days. Will the bottom be closer to 14,000? When it comes to what traders should be on the lookout for, and for that would signify an end to the winter, Glassnode highlighted the delta price and balance price as on-chain pricing models, which tend to attract spot prices during the late stage bears. So let's zoom this in a little bit. We can see here we had complete capitulation here in January of 2015, roughly here, where the price touched the delta and fell below the balance price. And then in 2019, we did it here. I can't see the price here, but we obviously wicked down to the delta price. Over here we had January or March 2020. That was obviously that pandemic. And then here we're just below or just above the balance realized price was 17,545. And now we're over 22,000 or so. And the delta price would be around 14,000. So if it repeats itself, that's where we might be going to. I'm hoping that doesn't happen, and I'm hoping this gets null and void, but we'll have to see obviously how that plays out. So, the other thing I wanted to show you guys here is on talking about Bitcoin. If we look at Bitcoin here really quick on, on the daily chart, let's go to the daily chart here and put in the 200 weekly moving average. We actually closed above it here, which was really good. Or we're about to close above it. We haven't closed yet. We got about 2 minutes or so before, or not even 2 minutes. We got 27 seconds before we close on the day on it. So we'll close above it, which is a good sign. That's usually a pretty good sign for bulls. But we'll have to see how it continues on, whether or not we stay above it or if we fall below it on the daily chart. The other thing that is kind of cool to see is I had this line marked here at approximately 23,800 or so. It looks like we came up to it, wicked it, came back down, and we have been bouncing off of this line here at 19,500 or so roughly, and we've been kind of range bound. And now we're seeing that we're in the new day, and we'll see where the new day obviously takes us with the candle. But right now we are above the 200-day moving average, which is good, which is great actually. We've been hitting it here a couple of times here on the daily. We hit it once here. We tried it here in the beginning when we were falling, and then obviously we were successful on the second or possibly the fifth attempt here to get above it. So we'll see where this leads us going forward. So cool day today on Bitcoin and obviously with Ethereum, with miners as well. It was nice to actually get a nice green day for them as for a change. We've had a couple nice days here for Marathon. I mean, Marathon's up 140% in the last 14 days. So we'll see if that continues on. I think Marathon might be a little bit overbought. So we'll have to see if it goes down a little bit. Bitcoin is getting close to being overbought as well in the daily chart, so we may have a little pullback there. We are definitely overbought, or we were overbought on the 1 hour. We've come back down below it, and on the 4 hour, we're obviously trading sideways here a little bit here now. So we'll see how that plays out. So as always, I hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. And we'll see what else we got going on this week. Obviously, not much miners news as far as we're still waiting on Mawson and another miner to provide their June updates, and then we'll do the miners versus miners video. I'll see how each one stacks up against their peers. And that'll be coming out hopefully soon. And that's it. We'll see what else happens in the world of crypto and Bitcoin miners. So thank you so much for watching. I hope you guys have a great one. I'll see you guys in the next one. Bye.